All right, Candle Range Theory Trader back with you with another video showing you how you can use currency futures for massive profits in correlation with the candle range theory. So let's get into it. So the steps are going to be very simple. First, we're going to use the weekly currency futures chart for daily bias. We're then going to pair bullish and bearish currencies based on those futures charts. I'm going to show you the setups to look for and then show you a few examples of a week in action. So these are the currency futures symbols on TradingView. 6N1, all of them start with 6 except for the dollar, but if you type in 6N, that's going to be for New Zealand. C for Canadian, it'll have the flag there. 6J1 exclamation point is going to be Japanese yen. DXY1 is going to be the US dollar. 6B is going to be British pound. E euro, S Swiss franc, and then A is for Aussie. All right, so those are the futures. So those are the symbols that we need to type in under futures to see the weekly chart and then get our directional bias for the week. So how do we determine the strength of a candle or get our bias? So when we're looking on the weekly chart, and I'm going to show you this, but I'm just describing it first. When we go on the weekly candle futures chart, if the weekly candle sweeps the prior week high or prior week low, so it goes above it and then closes below it, then we anticipate that being a reversal. Okay, so if it sweeps the prior week high or prior week low and then closes inside of it, then we expect for price to frame a reversal off of that price action. If the price closes below a prior week high or prior week low, above it or below prior week low, then we watch for a continuation. So we expect the price to continue to drop. And I'm going to show you this again. Okay, and then the two types of price action that we avoid, if we see a currency future weekly chart that doesn't sweep the high or the low, it just closes inside of the prior week's high and low, it doesn't touch either one of them, we skip that currency, it's indecisive, we don't trade it. And then lastly, if the candle sweeps both the high and the prior week high and the prior week low, it sweeps both of them with two wicks on either side, we skip it, we don't trade it. All right, so let's show you this and then you'll get a better idea of what I'm talking about. And then once we understand which currencies are bullish and bearish, we simply just pair those two for the best odds of our success. So I'm going to show you what I mean. So here's a week in action. So we pretend now that it's Friday. Okay, let's say it's Friday, Saturday, or Sunday. Either way, the market is closed. All right, everything's done. These are three futures charts that are going to show our directional bias for the next week. So I apologize if it's being kind of small, but the price action chart should show you what we expect. So this is New Zealand future weekly chart. See this big red candle here? It closed all the way down here. It closed below the prior week low. You only have to look for two candles, the prior week and then the week that just finished. Because it closed down here, we expect NZD to be bearish for the next week. Okay. Now the next currency future is Canadian dollar. See how Canadian dollar closed all the way down here. So it closed below the prior week's low. So we expect for price to continue. We expect for it to be bearish. And then lastly, the USD closed all the way up here above the prior week high. So what do we expect? A continuation for the dollar to be strong or bullish. So all we do now is just pair those currencies, because if the USD is bullish or strong and the Canadian is weak or bearish and the New Zealand is weak or bearish, okay, so then for that gives us automatically our bias. We take a dollar plus Canadian and that gives us a long bias for the next week. New Zealand dollar, it gives us a short bias for the next week. Okay, but we're not going to pair New Zealand and Canadian because they are both weak. So that's very indecisive. We don't want to bother with that. We're only pairing the weak and the strong. Okay, we only pair the weak and the strong. So let's see how the trading week turned out for those two pairs. And just remember, if two pairs are bullish or if two pairs are bearish, if they have the same thing, we don't trade those. Only trade weak currencies against strong currencies or strong currencies against weak currencies. So this is dollar CAD, and remember we had a strong long bias on it. Now each currency typically will give you about 1 to 2 setups a week, because as we can see here, this was Friday's price action. This is Monday. Monday gave us the price action that we're looking for. Price goes below the prior day low. Okay, it opened right here, bottom of that green candle. Stopped out anybody who went long on Friday, spiked up, and then closed up here. All right, so that would have been the price action. Now, obviously, it dropped the rest of the week, but for these, you want to aim for about 1 to 2, 1 to 3. Anything that it gets above the prior day high, take that as a good sign, and a good sign to go ahead and get out, because we're only dealing with ranges. All right. So this one right here, we only got one setup, but it was Monday and it was good enough because look at this price action here. This is the 15-minute chart. So we dropped down to a lower time frame for our entries. Price went below the prior day low. Okay, close back inside of it. That's our entry window right here between 11 a.m. and 12 p.m. Okay, this gave us a 1 to 5 with the 15 pip stop loss, 75 pip take profit. It went for much more than that. Typically, your take profit can be the prior day high. All right, so and it just straight rocketed up. All right, so that came from the bias, same price action though. Now for short setups, this was New Zealand dollar. Remember, we had a New Zealand was weak or bearish, so we looked to sell it. The setup didn't come until Thursday, and it was an imperfect candle range, but theory setup. But at the same time, it did play out because we used Wednesday's long as a frame to show the level that price couldn't quite break. So this is the daily chart right here. Let's drop down to the 15-minute chart here. Okay, so this red line here is that Wednesday long. Price failed to break it. Our best entry would have been during London at 4:30 a.m. It didn't give much window to get in. This would have been about a 1 to 3 because as we can see from the daily chart, it did not go all the way. It didn't go all the way to this range low here, but it did go below this prior day low right here. So remember, like I said, anything below the prior day low for a short or above the prior day high for a long, that's pretty much your signal to go ahead and start getting out. And whatever it is, that's just what it is, because we're only trading ranges here. We're not really trying to trade trend. Okay, so that was that. So the results for that, you got one trade that was worth about 1 to 5 and another one that was worth about 1 to 3. So let's try another week. All right, so we have a Canadian futures chart here. We just start with the weekly at the end of every week. Once you check the futures chart, you don't have to check it again. You only check it once a week for your bias. Okay, so Canadian closed all the way up here, so we're thinking Canadian is bullish. This futures chart on the yen is bearish because price poked above the prior week high and then closed back inside of it. So we're expecting a reversal. And then lastly as well, the dollar went above the prior week high, closed back in. I'm sorry, went below the prior week low, closed inside of it. This little doji candle here. So we are long for the United States dollar. So let's see how that played out. Because the Canadian is bullish, yen is bearish, dollar's bullish. So we just combine all of those together to get our directional bias, and we go from there. So we're not watching dollar CAD because they're both long. So we don't pair two strong currencies together. We're only pairing strong and weak. So I hope that's starting to make sense to you. So let's take a look at July 7th to see what played out. Now, CAD yen gave us two long setups right here on Monday and right here on Thursday, because all we're looking for is price to go below the low, close inside of it, and continue up to the prior day high. And it did it again on Thursday, Friday. If you see here, this was Thursday, this was Friday. Friday price did open, it come all the way back down, then it came all the way back up. But this one was pretty much a trending week for the CAD yen. So let's take a look at them on the lower time frames. This was Monday. Monday gave a good entry around 5 a.m. right here. Obviously, you could have got in back here as well, but I don't really try to trade Asia. So this is the best entry more or less right here, where price went near the prior day low and then just did a straight rise. This was good for 1 to 5. And then this was Thursday into Friday. This one may have been a stop out depending on where you got in, because you see here price spiked all the way down. Got anybody who went long here? But you had two chances. So if you get stopped out, don't give up on the pair. Just follow it and see if it's going to give you another chance to enter. Okay. But that's what happened there. So on the next one, dollar yen, Thursday was the only one that gave a decent long setup. So it was on this low. Thursday swept Tuesday's low. This is Monday. This big long candle here is Monday. This is Tuesday. That's Wednesday. Thursday swept the low of the day here, closed back inside of it, and then boom, a big expansion candle to the upside right there. So that was ideal. So just because you may have a pair that doesn't exactly sweep below the prior day low, if it sweeps below any day low in line with your balance with your bias for the week, that's more than fine. So Thursday took out Wednesday's low. That can happen. It's rare, but it does happen. And then boom, that's your setup though right here. Thursday was your trading day. But let's take a look. So this was the sweep right here. It happened at 10 p.m. Okay, which is rare. I'm not trading at 10 o'clock at night. Now, are there entries 24/7? Possibly. But at the same time, am I looking at the charts at 10 trying to find a trade? Not really. Okay. But that was that. It did pay out handsomely, and it did just keep going, as you can see, through Friday. So the results there were three trades. You got two 1 to 5 trades, and a possible loss on CAD yen because of the price action right here. Because this big spike down may have taken you out if you got in right there, expecting price to just keep going. It did come back down and then it went up. So that can happen. So just be prepared for that. We'll do one more. So this is just a pound dollar. So for this week, you'll see here how pound closed all the way up here. Okay, on the weekly future, that's where we start. And then dollar future closed all the way down here. So the pound is strong, the dollar is weak. When we put them together, that's pound, yen, we're looking to buy, okay, in line with our setup. So what did we get? We only got one setup, which was a Monday setup, where price went below Friday's low and closed up here. All right, and then it did spike up and went all the way up here before it tanked eventually as well. So like I said, your take profit is typically going to be the prior day low. In this case, it did hit the prior week high. I'm sorry, the prior day high if you're long. It did hit that and then eventually did come back down. So, and then here's the 15-minute chart there where it did spike down, come back in, and then just did a straight rise. That was good for 1 to 5, and that took place at about 9:30. So in conclusion, start each week just by looking at the currency futures weekly chart to get your bias for each currency, and then just pair the strong or bullish currencies with the weak or bearish currencies for your best odds. Okay, each pair should give you about 1 to 2 setups a week, but it's not guaranteed. Sometimes price will just drop straight down all week and there's no pullbacks. You just got to take that. Okay, but typically you can get about 1 to 2. Be sure to take your entries when price goes below the prior day low and then closes back inside of it. That's what you're waiting for. If it doesn't do that, at a bare minimum, you should at least expect the equal high or equal low if it hits the prior day high or prior day low. Sometimes it won't always sweep below it and close back inside. It'll just tap it. But those are your main trading levels that you want to look for: prior day or prior week highs and lows in line with your bias. When you get proficient, obviously you can add 1 to 2 positions to make your winners pay big. But always remember, it's risk management that gets us paid. It's not trading, okay? And don't risk too much. And I have to credit T Trades, who's on YouTube, and also Sir Pickle, who's also on YouTube for some of these concepts. I took a piece from them, kind of used it in my own. I used it in my own way, but that is who I got it from. So they definitely have a lot of great information on their channel. So definitely check those guys out as well. But I appreciate you watching. Thank you so much for your time and attention. Have a great rest of your day.